मेरी माँ ने सोना खरीदा है, मेरी दादी ने खरीदा है, परदादी ने खरीदा है, उनकी दादी ने पता नहीं कितने जनरेशन से। So, हम लोग एक्चुअली गोल्ड SIP इन्वेस्टर्स है जनरेशन से, बट विदाउट एक्चुअली saying that, right?
How does your portfolio look like today in terms of, asset allocation?
So my portfolio is very.
If you had to pick just one sector to stay invested for, the next 8-10 years.
Not one, two.
Okay.
If you want to make this as a part of your portfolio forever, then hold it.
मेरा एक follow-up question है. Assuming I'm a retail investor with 3 to 5 year horizon और मुझे markets रोज track नहीं करना है, तो ऐसे 3 rules non-negotiable which you would recommend?
Don't. That should not happen.
But there is also a loud narrative emerging this year. The era of simply buying the market through funds is over.
Theme के कोर में सेक्टर ही होता है, सेक्टर से ही थीम ओरिजिनेट होके बड़ी होती है. 10-20 years back it was only buying.
But what we have seen is कि 2021 to 2024 multi-cap funds consistently outperformed Flexi-Cap. But that trend reversed in 2025. What should retail investors realistically expect this year? And also, what is the risk when investors chase categories based purely on recent performance?
This is the only category in which the manager has the complete liberty to decide which stock, which sector, which...
Alright, next we have our, rapid fire round where I'll ask a couple of questions and I want you to answer whatever comes to your mind first.
Okay, that's the tricky part. Chalo, theek hai.
Joining us today is Mr. Shrinivas Khanolkar, Head of Digital Business, Marketing and Corporate Communications at Mirae Asset Investment Managers. Welcome to our show.
Thank you for having me.
So, Mr. Khanolkar, you have been with Mirae for so many years now, and your journey is very closely overlapped with the rise of retail participation in India. To start with, how has investor behavior changed from when you started your career to what we see today? And also, do you think investors are genuinely informed today, or it's also because, or largely because of, ease of access?
I think it's been, so this year, this is my 18th year running with this organization. So, but my whole investing experience started just before I came into this company, and that was in the previous bull run that we saw between 2003 to 2008. I think there it was all about everyday new highs, new stocks. It sort of coincided with a great rally internationally, and then within India, I think our overall our GDP numbers were very good. So a lot of new crop of investors did come in during that cycle, similar to what probably we saw during COVID.
Yes.
Like, so many new investors came in, but it wasn't like what we saw in the last 3 years. In fact, last 2025 we had volatility, but the other years were all one way, right? But when I started off, it wasn't like that. There were bouts of volatility as the market created a new high. We had a bout of corrections and all of it. In fact, interestingly, India is the only market in last about 10 years or so where each calendar year we are positive. There's no other market like this. Now, which tells you two things. It tells you that there is money for people to come in and invest. Classic example is 2025. We had 2 rounds of major corrections.
Yes.
Yet the market ended positive on a year note.
Yes.
In fact, it bounced back from the lows, which tells you that any round of volatility, I think there are enough investors now sitting to sort of take advantage of it. And the domestic inflows we are seeing have already sort of, capitalized on the maybe the non-availability of foreign funds. Right? Now, which tells me two things, that investors are looking for opportunities always.
Yes.
And second, I think the fear of capital market investing has sort of diminished to a certain level. Because in the previous phase, my starting point when I started investing first time, there was always that apprehension, will this last? Will this last? Or, or maybe a FOMO sets in that, no, we have to, it is just going one-sided.
Yeah.
Today we are seeing a different way that people want to take risks. And I think that is also impacting the way they invest. And I think one more thing which I'm seeing which is different to what earlier it was, that the fear of failure. I think the fear of failure is much levels below than what it was earlier. At that point of time, the amount was so limited. I mean, the salaries were so less at that point of time. So any loss would play a big detrimental to the psyche of the investors. But today, I think they are happy to sort of experiment, take higher risk, and even if they sort of falter somewhere, I think their ability to quickly bounce back is also to be seen, because otherwise we wouldn't see these sort of numbers which we have seen over a period of time. So that way, I think it's best ask them that it's because of ease of access, or is it because the whole generation growing up in a time where it's like cricket. I mean, in 90s we used to play timid cricket. Really, I mean, we used to go out to say, okay, जीत गए तो अच्छा होगा, but ठीक है, let's try to win.
Yes.
Today it's like we have to win, right? So I think the whole culture around you, it gets into the fabric of society, and we are seeing that change, and possibly that is one of the reason where people have sort of are investing more. But platform like yours and others which have emerged over a period of time, which are making the information accessible. What probably the next step would be that they would also looking forward for is, can I cut out noise and only focus on the right part?
Agree. I also agree to the fact that risk appetite काफी significantly increase हो गया है over the years. But largely retail investors ना equity centric रहते हैं. And we are sitting in January, and last year 2025 we saw assets like gold and silver
Yes.
emerging as the top performers. So what should be the outlook for 2026? How should people think about, investors think about equities in 2026?
So you've asked me a thing which I was thinking today morning on the gold investing part. मेरी माँ ने सोना खरीदा है, मेरी दादी ने खरीदा है, परदादी ने खरीदा है, उनकी दादी ने पता नहीं कितने जनरेशन से. So हम लोग actually gold SIP investors है जनरेशन से, but without actually saying that, right? I think that somehow today's generation is saying that they are not looking at from an ornament value, but they are looking at from an investing value.
Yes.
So I don't see anybody wearing any ornaments anymore. Maybe just earring, or वो भी diamond का होगा शायद mostly. No rings, no jewelry. But at the same point of time, they understand the value of the appreciation.
Yes.
Correct. And in INR terms, gold has really appreciated, not so much in dollar terms. So when it comes to investing, people are looking at it as a cyclical thing, rather than being कि ये हमेशा पोर्टफोलियो में होना चाहिए. मेरा एडवाइस ये रहेगा कि इसको हमेशा पोर्टफोलियो में रखो, because something which has worked for generations and generations of investing has not gone wrong. Today also it is right. Gold is making money for you. But there is a fear that people have seen the returns and they may jump in today.
Yes.
While because of what is happening geopolitically, maybe both these assets will perform.
Yep.
Right? Silver from its industrial use perspective and gold from a security perspective.
Yes.
Both can perform. And possibly this year again, because what's happening, it will perform. But do not treat it as something which I will buy today and sell tomorrow.
Of course.
If you want to make this as a part of your portfolio forever, then hold a 10% allocation to both of these forever.
Okay.
Then you will see the real unlocking of this value. Treat it like equity, treat it like real estate. You will make more money. But if you try to catch that, oh, there is 50% return aa gaya, 60% return aa gaya, let me jump in and buy, then probably you're just chasing. And then you might get hurt and say, no, I lost money. Let me come out of this. Which again will be detrimental to your overall experience. So it's much better that overall portfolio में आप 10-15% allocation इसको रखो. At points like this where you feel that other markets or other segments may not perform and this performs, you can take that to about 20%. So that percentage that you want to play about, keep it 5-7%. Don't make it like 100% of your portfolio.
Yeah, that makes me ask questions about Mirae is one of the few fund houses that has strong presence in both active strategies and passive, products like ETFs. In 2026, a lot of investors are asking one simple question: where is the alpha? So should retail investors be index hugger or this is the kind of environment where, you know, trusting a fund manager's stock selection ability would make more sense?
Excellent question, and let me break the myth. Okay.
Yep.
What is active and what is passive?
Hmm.
Active basically means that there's an active weight.
Yes.
Okay. So if index has a certain sector which has got say 10% exposure, within that there's a certain stock which has got 3% exposure, the manager says that instead of 3, I will either be 2 or 4, is an active weight strategy.
Yes.
Right? You're underweight or overweight. Okay. And he will decide whether I will stay in this position, I'll keep changing the position. In a passive product, it is 10% sector weight, it is 3% stock weight, that is it.
Yeah.
Right? But to maintain that, the ETF dealer actually is more active than the fund manager, because a fund manager can decide I will not change an allocation percentage.
Yeah.
So in a way, sometimes it's more passive than the passive funds, because the passive funds have to be actively managed to maintain the weights.
Yes.
And the tracking error and tracking difference. So this is one myth breaker. Second, I think the question is, when should one opt for passive? When should I opt for active?
Active, yeah.
Right. I think if you do not understand markets and you want to have a play, go passive.
Yeah.
Because all you want to understand is, if Nifty is giving you 12% return, first of all, let me get 12%.
Yes.
Right? Anyways, आपका traditional investments are not giving you 12%. So I need something which gives me 12%.
Yes.
Then be at the index, buy the passive product. Right? Then comes the story of, when do I buy active fund? That you should be buying when you say that 12% is not enough for me. If index itself is going to give me 12,
yeah,
then what should I do or to deliver better than that? For that, I'm taking a slightly higher risk.
Yes.
I'm coming to the capital market investing, so there is risk. Right? In passive strategy, you can opt for something called a smart beta products, right? Where you are investing basis factors. It's a value factor or a momentum factor or there are 3-4 factors like this, right? So you will go basis that, right?
Can you simplify a bit for our investors, like how to उसको कैसे read करना है?
फैक्टर इन्वेस्टिंग को?
Yeah.
ओके, सो आपको बेसिकली कोई भी मार्केट में आपको फंडामेंटल्स जो है और फैक्टर्स पे चलते हैं, राइट? सो आप देखोगे कि इस समय मोमेंटम स्टॉक्स चल रहे हैं, ग्रोथ ओरिएंटेड चल रहे हैं, वैल्यू चल रहा है, क्या स्ट्रेटजी चल रही है, एंड यू कैन चेंज द एलोकेशन. सो यू कैन गो एंड बाय अ वैल्यू स्टाइल passive fund or momentum style passive fund. In momentum, the stocks will be on one side.
Yeah.
Right? So over a period of time, they can generate higher, but आप risk बहुत बड़ा ले रहे हो. In a way, you can say कि मैं small cap investing कर रहा हूँ या micro cap investing कर रहा हूँ, right?
Yeah.
There you are going on the market cap level of risk. Here you are going on the factor level of risk.
Yes.
So in a way, there is higher risk, but comparatively between market cap level, because आप अगर टू स्मॉल कैप इन्वेस्टिंग आप कर रहे हो, आपके पास 250 स्टॉक है. अगर आप इंडेक्स ले लेते हो तो 250 स्टॉक में सम विल डू वेल, सम विल नॉट डू वेल. और अगर आप स्मॉल कैप का एक्टिव फंड ले रहे हो, तो आपके पास अपॉर्चुनिटी रहेगी फंड मैनेजर के लिए टू वीड आउट, से आई डोंट वांट टू बाय XYZ नेम्स, आई विल कॉन्सेंट्रेट टू 50 स्टॉक्स एंड डिलीवर दैट, राइट? सो but the other flip side is, if it is prone to risks, and the risk of then getting trapped into one factor alone can play. So to mitigate that, आपके पास multi factor funds भी हैं, where a manager will decide कि okay, today momentum will do well, so in the overall allocation मैं momentum का weight बढ़ा दूंगा, या value का weight बढ़ा दिया, या growth का weight बढ़ा दिया. So you have this style also. So I think, coming back to the question that you asked me, that what is the investor finally looking at?
Yes.
If he wants to generate alpha over a longer period, I think a manager can deliver better on a 3-year, 5-year, 10-year horizon. But अगर आप बोल रहे हो कि आज मार्केट 4% गिरा है और मुझे वो कैपिटलाइज करना है, अगर 4% बाउंस बैक करता है, in an active strategy may or may not happen.
Yeah.
In a passive strategy it will happen, because underlying आपका मार्केट वापस आ जाए.
मेरा एक follow-up question है. assuming I'm a retail investor with 3 to 5 year horizon और
जी
मुझे markets रोज track नहीं करना है, तो
जी
ऐसे 3 rules non-negotiable which you would recommend for anyone who wants to build strong mutual fund portfolio which can withstand volatility.
withstand volatility. Sure, I think see fundamentally आपका asset allocation सही होगा तो इसमें कोई issue नहीं आएगा. Even if there is volatility, because something will take care of it, right? So the best thing to do is then to look at a multi-asset fund, right, where I'm getting exposure across everything, or look at a hybrid fund in that matter, that asset classes will complement each other. But if you want to just do it from an equity oriented portfolio only, right, then I think your exposure to your large cap and flexi caps have to be slightly heavier if you're worried about the volatility aspect. If you're saying that volatility is not an issue, in fact, volatility is a good friend. So the more the volatility, I'll create more units. I'm young. I would want to have a portfolio over 5 years. It should have done well. Then आप mid and small cap ले लो. But one thing I think is certain. Don't track it daily.
Yeah.
Right? I think if you track it daily, then you're going to lose sleep.
Yep.
That should not happen. Second, look for something which is more stable in nature. It is more structural in nature. So if you're coming to investing in say themes, because thematic investing does happen a lot, right? And so many products keep coming. अगर आप thematic investing की तरफ देख रहे हो तो आप structurally देखो क्या अच्छा करेगा over a period of time. If you look at India, if it's a consumer-oriented economy, consumption fund should do well over a longer period of time. Cyclically, maybe you will always have large cap अच्छा करेगा, mid अच्छा करेगा, small अच्छा करेगा. But if you're looking from a longer horizon, then themes do well. Okay? And I'll give you a small snippet why I'm saying it. Nifty consumption index was born before Nifty 200 index. So I'm just giving you fact.
Yeah.
So that tells you that themes can perform over a longer period, and you can look at the returns. In fact, it has done very well. So themes can perform, but you just need to give them time.
Yeah.
Right? They may do well during downturns if they are structurally strong themes. But they probably, when a rally would happen, a small cap will beat it. A mid cap can beat it. But if you give 5 years, then you will see that thematic funds have actually done well. Because it irons out the risk in a certain way.
But there is also a loud narrative emerging this year, which is, the era of simply buying the market through funds is over. Meaning, 2026 belongs to picking fundamentally strong stocks, not broad sectors. So, in that context, how is Mirae thinking about positioning its, thematic ETFs?
I think for us, it's relatively easy because we don't see themes as a 1 year story, 2 year story. We look at themes as a perpetual sort of a thing, right? Theme के core में sector ही होता है, right? So sector से ही theme originate होके बड़ी होती है. मतलब your 10-20 years back it was only banks.
Yeah.
Right? Which has grown into BFSI today. Your healthcare was only primarily pharma. It has grown into wellness and healthcare today. Same is happening with your transport, logistics, and all of it, right? It was at core very small sectors, which have today grown to a larger thing.
We also have hospitals index now.
Yeah, you have you have a subsector sort of a. You will have sector subplots and then the broader theme, right? So, and I always say that if there is a completely new theme which you don't know what can play out, which stock particularly or which subsector in that can actually do well or not do well, then actually opt for a theme.
Okay.
Go for a passive fund which is giving you everything.
Yeah.
Right? Something will work, something will not work. Collaboratively, it can still do better, but at the aggregate level, maybe over a period of time, the sectors में से कुछ निकल के आता है. कोई stocks निकल के आते हैं, which the manager can then see and say that okay, this is the good part. Let me play on it. So that way, at Mirae Asset, we are very clear that we are launching a theme. It's not for an immediate sort of consumption. It plays out over a period of time, and what we have seen actually in most of our products, that when we launch a particular product, whether it's thematic or smart beta or whatever, Initial collections may not be that encouraging, but over the next 2-3 years, most of them grown 2-3 times.
Wow.
And the number of trades in them are also growing. Everyday trade volumes are growing, right? So that tells us that people look at opportunities at different points of time. So as an asset manager, we will come and put our products ahead.
Yeah.
Which product works at what time? I think that clients have their own sense, and they have advisors who tell them what to do. So they can choose. But primarily, any thematic product that we launch is never launched from perspective that, okay, I don't know what will happen after a year. We feel that, it's a good 3-5 year story, so let's go for it.
All right. Another thing is that, in 2025, actually, Flexi-Cap became one of the most, popular categories. But what we have seen is that 2021 to 2024, multi-cap funds consistently outperformed Flexi-Cap. But that trend reversed in 2025. So now with equity fund inflows dipping slightly, what should retail investors realistically expect this year? And also, what is the risk when investors chase categories based purely on recent performance?
So both the categories which you mentioned, flexi-cap and multi-cap, were born out of the categorization. Right? So, and in fact, they were introduced not in the first round, but much later.
Yeah.
So, one note of caution to everybody who's watching, some of the past performance would be coming from some other product, which probably would have moved here. Okay. So one needs to be very clear on check on that, what were the original products, whether they were slotted like this.
Yeah.
Thankfully, in our case, our flexi-cap is about 2.5 years old. Multi-cap is also 2 years old. Small cap will complete a year now. So most of our products have come in the new regime, where the categorization rules have been defined very well.
Yeah.
Now, a flexi-cap, the difference between a flexi-cap and multi-cap is, in a multi-cap, you have to do 25% minimum in large, mid, and small. So at all points of time, your exposure is going to be north of 75% in equity, which in a flexi cap can be 65%.
Yeah.
So 10% का फर्क वही हो गया. But anyways, I mean, most of the funds will have more than 80-85% in the equity space. And in fact, we do not believe in cash holding, because we believe that you have given us money to invest in capital market, तो हम capital market में ही पैसा लगाते हैं. हम उसके ऊपर एसेट एलोकेशन नहीं करते और कैश नहीं रखते. Our products are all, मतलब maximum you will find cash is like 4-5%. उसके ऊपर कभी नहीं मिलेगा आपको. Now, so multi-cap forces the manager to keep investing in that large cap bucket, mid cap bucket, small cap bucket. Always. So if you want an exposure that I want all the three market caps, then do come to multi-cap. Because that's going to restrict the manager from not following the rule. He is going to follow the rule.
Yeah.
So you say I want equal weights, I want, say ठीक है थोड़ा large cap ज़्यादा रहेगा, लेकिन मुझे mid small 25% minimum चाहिए ही. So then this is the category.
Yeah.
A flexi cap is going to give you, say he's going to do 65% in equity. He'll scale it up to say 85-90%, but then it's his choice whether he wants to do it only with one cap or a mid cap or a small cap or a combination. Yes. It is left to the manager to decide what needs to be done. So both the categories are very different from a fund manager's playbook. One has to remember that. Looking at just the performance, I think it's just an outcome of what happens. But because some category performed for 4 years, you were not investing in flexi-cap, I think that's completely wrong. Yeah. You should look at flexi-cap from a merit that this is the only category apart from ELSs, but with ATC in the just being restricted to the old regime, ELSs in future, we don't know. So this is the only category in which the manager has the complete liberty to decide which stock, which sector, which market.
Which percentage, yeah.
Which market. So look at it holistically. You want to give fund manager the complete leeway कि आप करो जो करना है. I'm only looking at outcome. I'm trusting you to do this. then let it do in that way. But if you are going to say ki no, it's I want all the exposures in one product, then it's a multi-cap.
All right. On that note, I'm sure our audience would also be very curious to know how does your portfolio look like today in terms of, asset allocation.
See, in India, what is happening is we are a consumer-oriented economy. So with consumption, the lifestyle comes in. With lifestyles, I'm sure at some point of time, I want to remain healthy, but कुछ ना कुछ आ जाएगा.
Yeah.
But healthcare has also evolved in such a way that गोली खाऊंगा और 80 तक जीऊंगा. So my portfolio is very equity heavy. Okay, that way, because I have to provide
Yeah.
for a longer time. But I have about 10% exposure to gold at the moment because there is a multi-asset fund to silver का थोड़ा बहुत exposure, but overall portfolio में it will not be more than 1.5%. That way it is I honestly don't have any long debt positions, but there are some STPs going on, so there are some liquid funds. That's about another 10%. So, but predominantly equity oriented.
All right. And if you had to pick just one sector to stay invested for, the next 8-10 years, purely from a structural long-term perspective, what would it be and why?
Not one, two.
Okay.
Which I just said. Do consumption, do healthcare for next 20 years in India. Right? I think both will complement each other. And both will do very well because as a society, we are becoming a consumption oriented society. We have been, but I think now with the income levels going up, the per capita income going on, the spends are going to be that way. So consumption will definitely benefit from it. And like I said, that we are also becoming a society where in the next 20 years, we will start aging.
Yeah.
So right now we are young, but you will find a lot of people who will get into the retirement distribution space.
Yes.
The income distribution to the families and everything. So that's where also is unfortunately a time where healthcare kicks in. I mean, one bill to a hospital and you're going to be like, thinking about what do I do next, right? So I think these two sectors complement each other for next 20 years in our country. So it's like, while I don't want to give that fallacy of sort of casino based investing, but be the house.
Yeah.
You will win on both sides.
Yep. All right. Next, we have our, rapid fire round where I'll ask a couple of questions and I want you to answer whatever comes to your mind first.
Okay, that's the tricky part, but chalo, theek hai.
First, crisis hedge, gold or silver?
Gold.
Stability of Nifty 50, growth of Nifty next 50, or broad India via Nifty 500?
Broad India.
Okay. Play safe with large caps or take selective bets in small caps?
Selective bets in small cap.
Build wealth through SIPs or create income through SWPs?
First build wealth through SIP, then take out money through SWP.
Smart one. Timing the market or time in the market?
Through SIP, you're timing the market,
Hmm.
and rest is time in the market.
Okay. Last question. When it comes to the upcoming union budget, what is the one change the mutual fund industry is genuinely hoping for?
Equal treatment for financial products.
All right. Thank you, Mr. Khanolkar, for taking time out and joining us today in this conversation. I think what really stands out from this conversation is that investing in 2026 is a lot beyond chasing what worked in 2025. It is about understanding market cycles and having right sorts of expectations.
So thank you for having me today, and fun having this chat.
Likewise.
Thank you.
If you found this conversation insightful, do share it with someone who is navigating through their investment journey. We'll see you in the next episode.